Welcome, everyone. Welcome, traders. Welcome, future traders. Welcome to those who are pretty much interested in learning how to trade. Welcome to my Forex Bootcamp training. I'm done usually on Saturdays. Doing a little late today, but I want to put it up on my channel today. That way, it gives you guys something to actually review and study. Today, we're going to go over order blocks and how to identify them and how to trade off order blocks. So let's jump into the charts. I have the charts open right now on Bitcoin. Bitcoin right now against the USD, which is the United States dollar. Bitcoin has hit an all-time high a couple of, I want to say, a couple of days ago. Yeah, last week, July 19th, when Bitcoin hit this area right here. And we're just going to dissect to see what's going on, see if we can find any opportunities within Bitcoin. I normally start off with a top-down analysis. So we're going to start with the weekly and then work our way down. Okay. Now, order blocks. We're going to discuss order blocks. Order blocks is pretty much a movement in the chart that it's been a huge bounce off of, so to speak. So if we look at this chart, we see this huge, uptrend or a pull up, if you will. Right before all of this activity, there's a candle before it, which we call an order block. So we mark off the order block like this. Some people do the body, some people do the wick to wick, but I do the body of the candle. And pretty much this is how you identify where to find the order blocks. So if we look at the weekly, this was an order block. Here's a nice bullish engulfing candle. Okay. Right here. So this is considered another order block. Okay. And then we just look at the whole entire chart to see if there's any more order blocks. So I normally look for 3 consecutive candles, and then I mark the order block. So that's a rule of thumb. Look for 3 consecutive candles that are, huge in its development, and then, mark the order block, which is right here. Okay. You can stretch it out because if the candles come back to these order blocks, it's a good opportunity to actually take buys. Okay, now if it breaks the order block, all right, it goes beyond it like this, right? If it does this, and it comes breaks the order block, then you have a reversal, right? So the order block is a good gauge, which will determine whether or not it would continue to go up or it would reverse. Okay, so if it does one of these numbers, comes back and touches the order block, and doesn't break through it, you can consider placing buy trades because this will be probably looking to do a higher high. But if you look at the whole entire market, you'll notice that the market right now is in an uptrend. So if you take from the bottom to the top, you'll notice the market was making higher highs. Okay. All right, because this high is bigger than the highs over here. Then you have a little retracement. Then this high is bigger than this high. So it's a higher high. It's small retracement. Okay. Now this looks like a double top, right? Then it came down. It broke this particular lower high, right? So you might say to yourself, okay, the market's going to reverse, but then look what happens. It bounces off the trend line and makes a higher high, right? Right here. Then it does a little retracement, does another double top, and pulls back, bounces off the trend line. That's why you got to mark your trend lines, because if it bounces off the trend line, you can actually, place a buy trade. And this is where the market's at right now. Okay. Now the candle, this last candle was printed for the whole of last week. So this is 7 days within this candle, right? So you got a week, right? A whole week developed in our entire candle. Okay. All right. It's 4 weeks and 4 weeks and well, it's a weekly candle. So you got like, yeah, a whole entire week, 5 days. Okay. 5 days. Okay. And then you drop down to the daily. And see if there's anything that's going to pretty much hint of a continuation or reversal. But all I can see, if I look at the daily, is that the market's not making any higher highs and it's not making any lower lows. Therefore, the market right now is in consolidation. It's going sideways. Okay. And remember what I said, you don't want to trade in consolidation. It's sideways movement. You don't know. You'll get trapped. Trust me. You'll get trapped. The market's not making any higher highs. Market's not making any lower lows. But there is a fair value gap. I'm pretty much taught you guys on my channel what a fair value gap is and how to locate a fair value gap. A fair value gap is two candles that, with three candles, 1, 2, 3. The middle candle creates the gap, and the wick of the first candle and the third candle did not meet or did not come and touch each other. So therefore, it created a fair value gap right there. So if there's a fair value gap and we have liquidity right here, there's a good opportunity that the market, let me get this tool here. This is considered liquidity right here. The market needs to come back, sweep liquidity, touch the fair value gap in order to continue its journey to go higher. Okay, rule of thumb. So you'll be looking at this on the daily to see, will the market come back and fill this gap? Normally it does. We just don't know when. So you would definitely look to place buy orders if you find a candle that will pretty much forecast that the market's going to continue to go higher. And typically that candle is a bullish engulfing candle right here. Okay. Now I'm going to show you guys a tool. If you're a paid subscriber of TradingView, there's a tool you can use in TradingView under indicators, and you go directly to technicals. And in technicals, you just scroll down under patterns and click on bullish engulfing candles and also bearish engulfing candles. And what it does, it marks out on your chart where the bearish engulfing candles are. Like this is a bearish engulfing candle. There's a candle that's, a black candle that's bigger than the previous candle heading downward. That's a bearish engulfing candle. So this red mark is telling you where the bearish engulfing candles are. Okay. So since the market is trending higher, what we want to look for, okay, are bullish engulfing candles, like right here. Okay, and then right here. So when you see a bullish engulfing candle, it's a good opportunity to, to let you know that, hey, the market's trending higher. So here it printed a bullish engulfing candle. And as you can see, it continued to go higher right here. So you're going to caught some pips right there off of this bullish engulfing candle, because you could have got in right here, right? Got in right here. Place your stop loss below right here, right below the bullish engulfing candle. You place your stop loss, okay? And you try to get at least, let's see how much can we get. Do a long position. We got in right here. We put our stop loss below the bullish engulfing candle. And you probably would have gotten, probably would have been like a 1 to 1.5. So right there, if you were paying attention to the candles before it pulled back, you could have got a small little profit right there. Okay. So whenever a bullish engulfing candle appears, you know, and you read the candlestick Bible book, like I invited you to read a while back, um, that right there would have gave you an idea whether or not you should take a buy trade or not. Okay. Now it's okay to set out trades. Okay. You don't have to take every trade that you see, because as you can see on this particular, you know, candle and pattern, it did retrace back, and it would have stopped you out. Right. It would have definitely stopped you out. And then, if you didn't have a stop loss, okay, it would pretty much really, really damaged your account down here. That's why we put stop losses to protect your principal. Okay, it's really important that you do that. Okay, so let's continue to analyze the chart. Okay, and anticipate the movement. I mean, we don't know exactly what the chart's gonna, know what the market's gonna do. We can only predict what we're gonna do and set traps, right? Set traps going forward. So as you can see, it marks out the bearish engulfing candles, and it also marks out your bullish engulfing candles. Okay, so this is a good indicator to help you decide whether or not you would jump into the market. Okay, because remember, you have your trend line right here. All right, and you notice that when the market bounces off your trend line and it prints out these bullish engulfing candles, you might want to consider getting in the market to ride the trend higher. Right, that's really important that we set those trend lines going forward. So always mark those out. So that's what you're looking at. Okay. Now, whenever you see, well, me, I'm always going to follow the trend. So I'm not going to be placing any sell trades on an uptrend. Okay. Unless the market reverses below my trend line, that's the only time when I'll be looking for a sell trade. Okay. That's the only time. All right. So this is definitely an uptrend. So I'm looking for buys during the retracements going forward. Okay. Okay, so I'm back. I had to do something really quick. So basically, we place these order blocks on our chart, and since we place these order blocks, look what happened. The market tends to come back, right, and touches the order block, and that's why we place order blocks. Okay. So we've went on the higher time frames, we placed our order blocks, but then we went down to the lower time frames, like the daily. So we started at the weekly, now we're at the daily. But as you can see, if you wanted to catch these trades down here, what happens? The order block, pretty much, it came back and touched the order block, bounced off, gave us a funny thing about the tool is the indicator. It doesn't print out all the bullish engulfing candles, so you definitely have to identify what they are on your own sometimes. Like right here, right when it went into the order block off of the higher time frame, you notice that it printed a bullish engulfing candle right here, right? Make sure you guys see that right off the order block, right? Here's a great place to actually place a trade. So you wait for the close of the candle and then grab a position right here. Show you where that is. So you would enter right here, place your stop loss below, and I try to look for a 1 to 3 ratio, sometimes a 1 to 2.5 ratio. This is a long position. So you entered here, place your stop loss down here, and you stretch this out for like a 1 to 3 or a 1 to 2.5. But this one would be 1 to 2. Okay. Now we're stretching out a little bit more to about right on this particular line. Yeah, so 1 to 3. All right, it's like a 1 to 3. Okay, because if you look right here, the this particular wick would have definitely got you your profit that you're seeking from a 1 to 3 ratio. Okay, so that's why it's really good to place these order blocks, because once the market comes back to your order block, you can pay attention to see what kind of candles are going to bounce off the order block. That's why it's really important to identify what these bullish engulfing candles look like. Okay, all right, so that would have been a winning trade. Okay, now you can always go down to the lower time frames and try to find the same exact thing. Okay, all right, so let's go down to the 15-minute. See what's going on there. So a lot of the candles are within the order block. So if you're a swing trader or a day trader and you place a trade, during the day, this the daily chart is where you want to focus. You have the weekly, the daily, and the 1 hour. But definitely pay attention to the order blocks that you place. So let's rewrite the tape here, start over. We're going to actually start at the weekly and identify. First thing we want to identify is, okay, are we in an uptrend or a downtrend? As you can see, the market right now on Bitcoin, if you pull your trend line all the way down from the bottom to the top, you'll notice that the market is in an uptrend, right? This is an uptrend market, bouncing off your trend line, making higher highs. Okay. So you have your high, you mark your highest point, which is right here. Okay. That's your high. You mark your trend line, letting you know that you're in an uptrend. Okay. Now you can always do this just to let you know, you're practicing, so you're finding out, okay, I'm in an uptrend because these highs are higher than these highs, right? So the market was printing higher highs throughout this trend, and that's the trend you want to be in. Okay. Now, where do you place your trades? You place your trades on the pullbacks. Okay, so you place your trades on the pullbacks. You place your trades on the pullbacks. You place your trades on the pullbacks. So if we do a microscopic and zoom in at the pullbacks, okay, no matter what trend you're in, no matter what time frame you're in, you're looking for, okay, a bullish engulfing candle off your trend line. So let's mark them out. Right here. Candle right to the right. We have a candle that's bigger than the candle before it. Bullish engulfing candle. Okay. Then it came back to touch your trend line again. And what did it print? It printed a bullish engulfing candle again. Okay. That's why it's really important to identify these bullish engulfing candles on your chart. Okay. Because once you see a bullish engulfing candle, okay, it's a good opportunity where it could go higher, like right here. So what is a bullish engulfing candle class? Is a candle that's bigger than the previous candle. Blue being an up candle, bullish candle, black being a bear or down candle, bearish candle. Okay. So you just mark those out, and they pretty much are printed everywhere, even right here, even though the candle to the right is bigger than all the candles. But I want to zoom in here and show you that right here is a bullish engulfing candle. Okay, so if you're going to identify bullish engulfing candles, remember that it could be part of your trading strategy. That when you see a bullish engulfing candle, you might want to consider placing trades going higher. Okay, so it's usually, you would place your trade here and try to ride it all the way up. Okay, you can also place um, a stop loss, a trailing stop loss as the market continue goes higher. You place your trailing stop loss. You can continue to change your stop loss. So if the market is over here, you move your stop loss from down here to right here. Then market continues to go higher. Like it went higher here, retrace, you put your stop loss right there. Okay, now you're still in the trade, and it didn't come down to break your stop loss or you know take you out of the market. You continue to move your stop loss on retracements. You're still in the trade, right? Because the market's printing higher, and you're moving your stop loss, and you're moving your stop loss, right? You keep moving it, right? Because it's printing higher. So you could have rolled that whole entire trend, placing your stop loss below the bullish engulfing candles. All right. So hopefully that was helpful. Hopefully you learned a lot from this particular training. I mean, you could identify this in any time frame. I showed you on the higher time frames. I mean, you can find it on the lower time frames as well. Uh, I, for one, is I'm a day trader, but I have no problem doing swing trading as well. I could hold on to a particular trade for days, weeks on end if it's a good opportunity. Um, or I can get in and out like a sniper. It could be a sniper. So it all depends on what type of trader you are. If you're a sniper, you're in and out. If you're a day trader, you hold it for a couple of hours throughout the day. A swing trader, you hold it for a couple of days. All right, so a different type of trading that you just got to pick one that suits your style. Okay, because some people are patient. That's when psychology is really important with regards to the market. You have to improve your psychology. You got to set it and forget. You can't get emotional because once you're dealing with real money, okay, you can't get emotional. The market goes against you, it's fine. You reset, you recalibrate, and you go back in. Okay, you got to build a strong mental attribute to actually trade. Okay, so it's important to do that. So continue to back test what I just shared with you. So I mean, you like I said, if you could take any pair, right? Let's go to another pair. Let's do Euro USD. Okay, we're gonna do the same exact thing. We're gonna go to the weekly. Okay, and we're gonna identify what trend is the market in right now. As you can see, okay, the market, it's almost like it's in a huge consolidation. Okay, so you just got to be careful when you're going to be placing your trades. All right, because I see a couple of things here. I see sideways movement here off a downtrend. Okay, then it broke out the box one higher, so this would be considered a downtrend right here, right? You put your arrow here. This whole area was a downtrend. And you had your consolidation. Okay, looks like the whole entire market is a downtrend because if your highs here, right? This is how you identify a trend. You have your highs here, but then it was printing lower lows, right? Because this low is lower than this low. It's a lower low. It retraced, came back, and it went sideways here, came back, then printed a lower low because it's lower than these lows over here. Then it went into this consolidated box. It printed out, came back, but we're still in the lower low because it did not breach this particular area. Okay, so we're still in a downtrend. All right, so here's another lower low. This low is lower than this low, right? And then it went sideways again right here. Take back this tool here, right? Then went up, went into this, kept itself in this box right here, broke out of the box, but didn't really break out of the box to make a lower low. But we're still in the downtrend because it didn't break these lows here, higher lows, lower highs, I should say. Okay. And right here, now it's outside of the box. So this is the box if you stretch it out. It broke out of the box. Okay. So I'd be looking for to place a sell order because again, it didn't breach or give us a change of character over here. Okay. If it goes beyond this line and bounces off the line, then you have an uptrend. But it didn't breach this area here. Okay. So that's the weekly, right? But now we need to identify where is our order blocks. Okay. Where is our order blocks? So I'm gonna go ahead and bring this over here because it broke out right here. Okay, came out, retouched the box, and broke out, right? So that's where I would place this. So that would be a breakout trade right there, right? But I'm looking for sells because the market's telling me that based on historical data, that it's going to trend lower to break the lowest low, right? These lows over here. So, but I'm looking for my order blocks. All right, now the order blocks are usually is down here. Remember, usually look for 3 candles, and then you place your order block. There's one right here. Remember, we're looking for down. We're looking for we're looking to place a trade. Because it's a downtrend, we're looking for sells. So we could place an order block right here. It's developing into an order block, right? And we just need 3 candles of print, okay? And that would be considered an order block on top, okay? Let's see if we can find any other order blocks. All right, so 3 consecutive candles over here. There's more than 3. There's another order block right here. Okay, so we need the market to break these lows here. So, okay, but what are we looking for? In order for us to take a trade going lower, a sell trade, define a bearish engulfing candle. And what do we see at the top of this? We see a bearish engulfing candle. Okay. The black candle is bigger than the candle previously. So therefore, that is a bearish engulfing candle. That is a bearish engulfing candle. Okay. So if you see this and then the market close with like a hammer, you know, like a hammer, a stick at the bottom, a huge top. It's a hammer. Therefore, if we go down to the lower time frames on the daily, we notice that, yeah, it started to come down because the top of it is giving you indications that it's making lower lows, right? You have your, if we adjust this, we have our bearish engulfing candle right there, right? And then normally, if you remember my last week's training, I said, whenever you see this, put a line underneath the blue candle. And then what it has to do is come back and touch that line. And then you place a trade going lower. And this would be considered a sell trade. Because it's at its all-time high. Usually when it's at an all-time high, okay, for that particular day, it needs to recalibrate or reverse. Therefore, you could have got some sell trades in here. Again, you place it, the order, at the close of the candle. Okay, in this case, it would be like the close of the candle right here. Your stop loss would be up here. Okay. Even though it came back, retraced a little bit, you still would be in profit. Okay. And trying to ride this all the way down. So if we even go down to the 4-hour, you'll notice that the market, came off its highs and start printing lower lows. Okay. So the weekly time frame, that's why you do a top-down analysis to see what's going on. Okay. It tells you what direction the market's going in. And it tells you, especially if you see a bearish engulfing candle on the higher time frames, you go down to the lower time frames to look for entries. Okay, look for entries. And typically your entries are where? At the order block and or at the fair value gap. Okay. So if you look at this over here, okay, we have an order block right here. And what did it do? Come back and touch the order block, and we continue this journey going lower. Okay. And you have your bearish engulfing candle from the previous time frame, and you already set your stop loss up here, so you would have never gotten that stopped out. And like I said, you could move your stop loss, trailing it downward, downward, downward. That way you can lock in some profit along the way and secure the bag. Okay, that's the way I look at the market. Hopefully, you guys got value out of that. And yeah, so that is how you find order blocks. Okay, and that's how you trade off an order block once it starts coming back to the order block. If you miss it off the bearish engulfing candle, it'll retrace. Hopefully, it'll retrace, right? There's no guarantee that it will. So pay attention to the candles and then map them out and then place your trades according to what you see. And always place your stop loss and always place your take profit. Because this, if you would have place your trade up there where that bearish engulfing candle was, which was up here, right? You'd place your, at the close of the candle, you place your stop loss right there, and you stretch this out. This one would have been a really good trade, a 1 to 7.77. But my thing is, don't get too greedy and make it a 1 to 3, and you would still secure some profits, unless you would have moved your stop loss. Okay, and if you got more than one order in, you could let one order run, close out the other two, so you're in profit. Okay, or close out two and let one run. Okay, so this one would have been a 1-to-3. Say a 1-to-3 ratio. You would have secured a bag right there had you seen that bearish engulfing candle off the higher time frames and you come down to the lower time frames, place your trade on the lower time frames. Okay, whether it's the 4 hour, the 1 hour, the 30 minute, the 15 minute. Because if you did the 15 minute, look at that. You could have got more pips out of it. Okay. You could have probably stretched this out all the way down here for, a 1 to 7.63% had you moved your stop loss. Trailing stop loss going down, okay, or entering on the retracements, right? That's, like I said, you're looking for sell trades because the overall direction of the market was a downtrend. And that's how you identify the trend. Okay. All right. So, with that being said, I'm going to go ahead and conclude this training and invite you to come back to next week's training, where we'll talk about another segment within, you know, within what I've been sharing with you. We continue the training from last week because let me just pull up something here. Okay, hold on one moment. Okay, because we went over market structure, we went over break of structure, BOS. We just went over order blocks. Next week we'll go over liquidity and how to identify liquidity, how important it is to, you know, make sure you identify where the liquidity is and wait for the market to sweep liquidity, before you take a trade. And then after that, I think that'll conclude the training because we went over a lot of things. I also want to go over fair value gaps with you guys again and gals. That way you can identify fair value gaps as well. Typically, fair value gaps are right next to your order blocks. That way you can identify those particular areas before you place your trade because the market has to fill the fair value gap. And if the market bounces off your order block, then it's a good opportunity based on identifying bullish engulfing candles and bearish engulfing candles. The bearish engulfing candles are from the top down, the bullish engulfing candles from the top up, from the bottom up. Sorry. All right, so that concludes today's training. Share the video with your colleagues. Stay tuned for a lot more videos from me. I'm going to be doing a presentation on the Cash X. So if you guys haven't been watching my videos on that, I encourage you to do that. There'll be a link in the description so you can join the Academy. I'm actually going to be promoting the Academy to up-and-coming traders, people who are, looking to become a trader, people who have the skill but want to, sharpen their skill. I would encourage those individuals to join the Academy as well. There's so much you can learn inside of the Academy. The Academy has over 200 videos that you can watch, tutorial videos. They have live sessions with instructors and traders who actually go into the market and try to look for opportunities based on what they teach. So these live traders are also instructors or teachers. There's also indicators, there's tools in the Academy that you can use. We're going to go over all those tools to help you sharpen your trading skills. That way you can identify winning opportunities, A1 setups, things of that nature. And there's also a compensation plan as well and a whole management system as well as you start to invite other people to become part of the Academy. You'll be growing your own community as well as being part of my community. And as a community, we'll share ideas, we'll trade together, we'll do live sessions together, we'll create trading plans together, and we'll make money together. Now, there's no guarantee of income. Your income's depending on your work ethic, how much time and effort you put towards learning this skill set and implementing the skill set and practicing the skill set. Because practice makes perfect, perfect practice makes perfect. It's important to come to the charts when the markets close and simulate simulate a trading activity. So, for example, I could, if you're a paid member of TradingView, you could simulate the whole entire thing. Like I can go over here, cut it, and then click play, right, and see what the market does based on what I see here. Okay, so that way you can practice and say, okay, if I see this happen, if I see this happen, okay, where would you place your stop loss? Where would you enter? Where would you place your take profit? So on and so forth. So this is a recording tool, so it can actually, you know, allow you to replay the market and pause it, fast forward it, and pretty much place a trade and see if you would profit from the trade. Okay, based on your ratios and things of that nature. So this is an excellent tool to have when you're doing your back testing. So this is available to all paid subscribers. If you go to my website at metrofxtraders.com, you click on TradingView, go ahead and get your your charting platform. It's the platform that I use to chart um, and plot my strategy based on different pairs and things of that nature. So definitely, this is a great way to practice because once your eye can see the movement of the market, typically it repeats itself over and over and over. The market can only do two things, actually three things. It can go up for an uptrend, it can go down for a downtrend, and it can go sideways for consolidation. Okay. So once you identify an uptrend, you go to the lower time frames to place an order based on pullbacks. If you can identify a downtrend, you go to the lower time frames to look for pullbacks to place a trade. Okay. We enter on pullbacks, we exit when the market prints higher highs. Okay. We also for lower lows. If the market prints a lower low, you want to exit and collect your money, right? So that's the strategy. All right. So, I wanted to show you that this tool is available to all paid members, and definitely, get it if you can, and definitely look out for more videos from me because I'm going to show you how to make money through affiliate marketing on my channel. Okay, how you can partner up with um, me, right, promoting different income streams or trying to, you know, get different income streams to come into your household where you can actually use that income to trade with. All right, because I'm going to teach you how to be your own bank with the income you make from these affiliate programs. I'm going to teach you how to trade that income and hopefully, 10 times it, right? But again, there's no guarantee. I can't guarantee anything. All right, with that being said, I want to thank you guys for watching. Subscribe to the channel, hit the notification button. That way you know when the next video is going to be coming out because they will send you a notification of that. And then if you need to rewatch this video to understand what order blocks are, please do so. And then if you will, give a thumbs up if you appreciate the content. Thanks for watching, everybody. Have a great, successful trading week, and see you next week.